Welcome. In this video, Zbcn coin 200% heart rise comes. We will analyze it. Don't forget to subscribe. Don't forget to like, and please watch to the end to understand. The chart currently displays a highly notable and promising ascending channel structure from an investor's perspective. This formation is particularly meaningful as it demonstrates that the price has been showing a consistent upward trend over time. Ascending channel formations clearly indicate strong buyer pressure in the market, and that sellers have not yet been able to pull the price down in a lasting way. In particular, the price holding around the midline of this formation can be a highly critical signal in terms of technical analysis. These areas function as both psychological and structural support levels. In the current scenario, the price moving sideways near the midline could signal a potential upward breakout. The midline, acting as a strong support level, usually represents a stage where buying positions are reactivated. Especially if the price is closed above this midline several times, it can be interpreted as investors viewing this area as a safe zone, and the likelihood of the price bouncing upwards from this level is high. Looking at past chart data, the price has found support multiple times when approaching the midline, and has subsequently made highly impressive upward moves. Therefore, this midline can be considered not only as a current support zone, but also as a potential trend accelerator. The upper band of the ascending channel, on the other hand, is a significant resistance level closely watched by investors. When the price reaches this upper band, it typically indicates that buying appetite is peaking and that market participants' risk appetite has increased. However, if the price hasn't yet reached this level and an upward movement begins with a reaction from the midline, a new rally toward the upper band could potentially be initiated. In such a case, investors could see returns of up to 200%, as seen in past data where moves from the midline to the upper band often resulted in significant momentum gains, leading to sustained price increases. Moreover, this ascending channel structure not only reflects price movements, but also mirrors the general sentiment of the market. The positive slope of the channel indicates that investors are optimistic about long-term expectations and that every pullback is being viewed as a buying opportunity. In this context, an upward reaction from the midline may not only signal a short-term recovery, but could also mark the beginning of a larger bull run. Especially when the price bounces from the midline and breaks out with volume, it is perceived as a strong buy signal by the market, prompting many investors to take positions. Some minor corrections may occur as the price moves toward the upper band, but these are usually seen as natural pauses before a larger rally. Therefore, such micro-corrections should not be a cause for panic, but instead evaluated as new buying opportunities by investors. When the trend is upward, short-term sell-offs do not reverse the long-term uptrend, but rather create temporary pauses within it. As long as investors can correctly interpret these pullbacks, the possibility of the price bouncing upward within the ascending channel becomes a highly plausible scenario. In addition, the structure of this channel being suitable for upward expansion implies that the price may not be limited to just reaching the upper band. That is, even when the price approaches the upper boundary of the channel, if volume increases and technical indicators are strong, a breakout beyond the channel is also possible. This scenario may bring not just 200% gains, but even greater profit potential. In such cases, the breakout beyond the channel scenario often reattracts investor interest and leads to new capital inflows. Another important point to remember is the existence of psychological threshold levels. As the price moves upward, there are certain numerical barriers embedded in investors' minds. When these barriers are broken, the resulting increase in confidence and expectations gives the price not only technical support, but psychological reinforcement as well. In conclusion, the current formation of the ascending channel on the chart, with the price holding near the midline, is a very positive technical sign. A bounce within this structure should be viewed not just as a short-term move, but potentially the beginning of a broader bull run. If the price holds this midline and gains upward momentum, a move toward the upper band becomes inevitable, and such a move could offer highly rewarding returns for investors. Opportunities like this should be carefully evaluated by investors with technical analysis knowledge. Proper decisions within this structure can help minimize risk and maximize profit. Especially during periods of strong market sentiment and high investor confidence, these kinds of ascending channel formations can yield substantial returns. For this reason, every positive signal coming from the midline should be closely monitored, and the potential for a rally toward the upper band should be kept in mind. But we can't make decisions based solely on channels. Let's take a look at other metrics as well. Stay tuned.
When we look at the current technical structure of the price, we can see that it is positioned just below a specific resistance level. This area may have previously been a zone where the price struggled during upward movements and faced selling pressure. However, when we take a closer look at the current price action and market dynamics, some technical signals suggest that this resistance level may have weakened and a breakout could be imminent. In particular, the increasing buying volume and upward momentum strengthen the possibility of the price breaking through this area. If the price manages to break above this level with a solid and strong move, there would be no remaining horizontal resistance zones from a technical standpoint. This could further increase investors' buying appetite. These types of resistance breakouts, frequently observed in technical analysis, can often mark the beginning of a new upward trend. Because breaking through a level where the price has previously reversed multiple times and where the market was believed to be filled with sellers creates a significant shift in market psychology. For many investors, such a breakout is seen as the beginning of a new phase, which can lead to a faster and more continuous upward movement. In this case, investors who previously took profits or stayed on the sidelines may begin to re-enter positions. This would be one of the factors that increases price momentum. The psychological environment created by this upward breakout is also quite significant. Resistance zones act as psychological barriers in addition to being technical ones. When the price moves above this level, many investors may interpret it as an important victory or a turning point. Especially those who saw the price previously fail at this level may gain confidence when they see it surpassed, which could attract more buyers into the market. Such a psychological shift can alter market dynamics even in the short term. Breaking this resistance level could also indicate a change in trend or a strengthening of the existing trend from a technical perspective. This scenario makes it easier for trend-following investors to take positions. At the same time, algorithmic trading bots and systems may also interpret such breakouts as automatic buy signals and place buy orders accordingly. This becomes another important factor that can accelerate the price movement. In such scenarios, sudden spikes in volume are often observed, along with strong bullish candlestick breakouts, which indicate a strengthening technical structure. Once the price breaks above this level, the area that previously acted as resistance may now turn into a support zone. This technical shift can help stabilize the price and provide a secure base for continued upward movement. If the price manages to hold above this new support level, the likelihood of the uptrend continuing becomes much stronger. This is a classic but very effective example of the support-resistance flip in technical analysis. This transition provides investors with the confidence to either take new positions or maintain existing ones. Additionally, in higher time-frame analyses, the gap above this level is notable. If there is a region that has seen little to no trading in the past during upward movements, this lack of liquidity could allow the price to rise rapidly with minimal resistance. In such empty zones, price volatility may increase, but the direction is generally upward. With no significant obstacles above, the price's natural room for movement expands. This means large price changes in a short amount of time, which can create major opportunities for traders and investors. Since a large portion of investors follow these types of technical structures, once the price surpasses this level, the coin may begin to receive more attention on social media, forums, Telegram groups, and analysis platforms. This can trigger FOMO, fear of missing out. When people see the price rising rapidly and that there are no major barriers left, they may want to open positions with the expectation that the price will continue climbing. These psychological reactions can cause the price to accelerate even more after a technical breakout. During this phase, consecutive green candles may appear on the chart, signaling increased momentum in the uptrend. In conclusion, if the price breaks through the resistance level it is currently testing, there will be no significant technical barriers ahead. This would allow the upward movement to continue more comfortably and strongly. From a technical, psychological, and algorithmic perspective, This breakout is extremely important. Therefore, investors should closely monitor this level and be ready to respond to the movement that may occur if a breakout happens. Once the path is cleared, the uptrend can continue more clearly and uninterruptedly, representing a major opportunity for investors.
The fact that the price is currently positioned above the 200-day exponential moving average is an extremely important and strategic signal closely followed by investors in technical analysis. This not only confirms the strength of the current trend, but also carries a highly positive outlook for the future direction of the market. The 200 EMA is one of the most reliable references used to understand the overall trend of the markets, especially for long-term direction. When the price remains above this level, it indicates that buyers are maintaining control and the market is showing resistance to a downturn. In this context, price action remaining above the 200 EMA generally suggests growing investor confidence, a healthy market structure, and the activation of long-term bullish scenarios. This is often referred to as a bullish structure in technical analysis. Such price behavior usually signals that strong buying interest continues and that major players are still actively holding positions in the market. For investors, an asset trading above the 200 EMA is essentially swimming in safe waters. This is one of the initial signs that the upward trend may further accelerate. Especially when the price consolidates above this moving average for some time, it indicates a strong base is forming, one that could act as a springboard for moves toward higher price levels. On the other hand, many professional investors pay close attention to whether the price is above the 200 EMA when making buy decisions. As long as this indicator confirms that the long-term trend is upward, market corrections are seen as buying opportunities. This is a critical point in market psychology. Even if short-term fluctuations occur, as long as they happen above the 200 EMA, long-term investors don't need to panic. On the contrary, such pullbacks are viewed as strategic entry points for those looking to open additional positions. Moreover, it is highly significant when the price tests the 200 EMA from above and confirms it as support. In such scenarios, the moving average acts almost like a fortress. As long as the price doesn't break below this level, the likelihood of the upward trend continuing without disruption significantly increases. This also serves as technical evidence that the market hasn't bottomed out and that strong hands are still holding their positions. From a long-term perspective, trading above the 200 EMA generally signals the beginning of a new trend or the further strengthening of an existing bullish trend. In this regard, it would be highly appropriate for investors to plan mid to long-term bullish strategies in such a setup. That's because in these scenarios, the price's upward potential is supported not only technically, but also psychologically. In addition, large funds that operate with algorithms also take these kinds of technical levels into account. Automated trading systems can trigger buy orders once they detect that the price is trading above the 200 EMA. This can increase momentum along with volume and speed up the upward movement. Holding above this level is reassuring not just for individual investors, but also for institutional players. To summarize, the price trading above the 200-day exponential moving average shows that the prevailing uptrend in the market is strengthening both technically and psychologically. This structure boosts investor confidence and with volume support allows for continued upward movement. While short-term corrections may occur, as long as the price stays above this level, the broader bullish structure remains intact, strongly suggesting that higher levels can be targeted. The 200 EMA is intended for identifying long-term trends. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.